The weekly pending home sales picked up this week as expected. This week had 2.6% more pending home sales contracts started than a year ago. If you're following the data closely, you know that home sales are still running at or below last year's pace. Year to date, through the first week of May, we count 3% fewer total sales than in 2024. But in May and June, the yearly comparisons get easy because last year at this time was really dry due to the highest mortgage rates of the year. So the next bunch of weeks should report home sales growth each week. What's interesting is that if we look at just mortgage application data, meaning how many potential buyers are applying for a mortgage to buy a house, this data has been running well ahead of 2024 since February. The MBA, a purchase mortgage index, is usually a very good gauge of home purchase volume. But this year, there seems to have been more people applying for mortgages, but the same level or fewer people buying houses. So just today at HousingWire, we ran a story that some lenders are reporting last Tuesday was their biggest application day in 3 years. So what's going on? Well, it could be a shift away from cash buyers. So the last few years, as mortgage rates rose, we saw an increase in the percentage of deals that were done in all cash. So it could be this year fewer deals overall, but more mortgages being used. Or this could just be an indication of like pent up demand. There are plenty of folks who have delayed purchase decisions for several years and maybe they're tired of waiting. If that's the case, that's a bullish indicator for home sales in the next couple of months, though I confess I am not super bullish. Now, as I've said frequently, May and June should show year-over-year home sales gains over 2024. It'd be nice to see that happen. The risk for this market is that mortgage rates could go higher from here. So even as the stock market has rebounded, the bond market has kept rates high. So the affordability problem can't be denied. So stay tuned for the next few weeks to see if we can grow home sales over 2024. I think the next couple of weeks will indeed report sales growth. So I'm Mike Simonsen. I'm the founder of Altos Research here at HousingWire. Let's dive in to the housing data for the first full week of May 2025. So home sales ticked up as expected this week. We counted 74,000 newly pending home sales for the week. That's up 4.5% for the week over the week prior and is 2.6% more sales than the same week a year ago, single family homes. And as I've said, look for May and June to see year over year gains in home sales from 2024 because sales were very weak last summer. You can see the sales drop off in this chart here. 2024 is the blue line. See how that line dips right as the purple line crosses now? So home sales peaked for the calendar year 2024 in early May at just under 78,000 weekly pending home sales, single family. You can see the spike in blue here too. So the biggest week last year was only 78,000 single family sales in a week, and that happened right at the beginning of May. Mortgage rates at that time surged to 7.5%, and then home buyers just walked away. So last year, home sales started moving lower. And in most years, though, the weekly home sales tend to max out later sometime in June. So this year, it looks like we still have more room for growth. There hasn't been any catastrophic economic news in a few weeks, and mortgage rates have been stable. Rates are not falling, but at least the 30-year fixed rate is under 7% and doesn't seem to be going much higher for now. So if things stay on this pace, we should expect the next couple of weeks for home sales to climb. To show growth in home sales for the rest of May, we don't need a boom. We just need things not to collapse. So fingers crossed for that. By the way, condo sales are a lot weaker than single family, and the condo sales are still running plenty behind 2024 levels. Okay, onto the supply side. So there are now 756,000 single family homes unsold on the market around the country. That's 33% more than last year at this time, and it's up 1.6% for the week. That's not a huge jump for May. There are 11,000 more single family homes on the market now than a week ago. Unsold inventory is steadily approaching the old normal levels that we used to have pre-pandemic. So there were only 11% more homes unsold on the market at this point in May 2018 than there are now, only 11% more. We're getting close. In this chart, each line is a year. The purple line for 2025 keeps climbing north to the old normal levels. Those are the lines at the top. The green line is 2018. 2018 was a rising interest rate year, and inventory rose also that year. And you can see the green line for 2018 finished with more homes unsold on the market than 2017 or 18. But in May, 2018 was the lowest level of recent pre-pandemic years. Inventory continues to build, even though sales are maybe inching higher. So inventory is building faster, and that's keeping a lid on prices. And we'll get to prices in a minute. But still on the supply side, we need to look at the new listings volume. We finally hit 80,000 new listings unsold this week. This is a threshold we've been talking about for a few weeks, for several years, since the end of the pandemic boom 3 years ago. The defining characteristic of this housing market has been how few sellers there are, and that's finally changing. Think about home sales. It's like hard to get 80,000 home sales in a week if there are only 70,000 sellers. We've been in a supply-constrained market, but now, pretty definitively, the seller volume is picking up each week, and that's one thing that enables sales to increase too. So, in addition to those 80,000 unsold new listings, there were 15,000 immediate sales. These are the new listings that go immediately into contract and don't add to the active inventory. That's the fewest immediate sales for early May that we've seen since we've been tracking. It wasn't that long ago where there were 30,000 immediate sales in a given week. Now there's only 15,000. Immediate sales happen in every market. There's a best homes priced right. They get offers immediately. But when buyers don't have the urgency, there are fewer bidding wars and there are fewer immediate sales. And in fact, last year at this time, the immediate sales rate fell off a cliff. Immediate sales, remember, like when homes get listed and go into contract essentially immediately. So when demand weakens, immediate sales don't happen. And as those immediate sales fell, so did total sales. So we can gauge the demand shift in May 2024 by both of these metrics. So in this chart, the new list is of the new listings and the immediate sales. So each bar is a week. The taller the bar, the more sellers that came to market in that week. You can see at the right end of the chart, that's now this week, there are more new listings each week than there have been for several years. So even though purchase volumes may be inching higher, the supply of homes on the market is moving faster. And as a result, the median price of this week's pending home sales came in at $399,900. That's below 2024 for the second week in a row. Now, it's just a tiny fraction below last year. Prices tend to cluster around $400,000. So it's not a surprise that the price is very close to last year. Still, 2 weeks in a row where the sales price nationally is slightly below a year prior. And you can see that purple line here, just a hair below the 2024 blue line. Most years, of course, home prices increase around 5% per year. This is because we generally have a growing economy, growing population, a little inflation, and we tend to underbuild homes. So the nominal growth in home prices tends to be about 5% annually. A flat year in home prices is pretty unusual, and a down year when home prices end lower than the year prior is very unusual. 2025, as of right now, has unchanged home price appreciation, average nationally compared to 2024. Home prices are flat year over year. Depending on a few variables, mortgage rates and macroeconomic trends, where inventory keeps climbing, home prices for 2025 could end lower than 24. One interesting note in the home price data is that list prices are appreciating a little faster than pending sales prices. And that's because the more expensive homes are taking longer to sell. So the median list price is 2% above last year at $460,000. This is there's a growing disparity between the list and the sales, the pending sales prices. None of the data really shows home price strength, of course. And as we switch to the leading indicators of future sales prices, this is the percent of homes on the market with price reductions, and that ticked up by 30 basis points this week to 36.8%. So after a few weeks of stability in this metric, it has recently started to climb again. And you can see that purple line here for 2025 remains at the highest level in years, meaning more of the homes on the market now are unsold and have taken a price reduction from the original list price. You can also see the green line here from 22. Demand and price conditions were deteriorating rapidly at that time. And each week, a lot more folks were cutting prices then. That's not happening now. Demand is still light, supply is still climbing. So a fair number of sellers don't get the offer they want, and they cut their asking price to stimulate demand. The takeaway from price reductions now is that even though we will probably report sales growth in May and June, that's partly because we have a lot more homes available to buy. So if we actually saw demand increase, that would translate into flat or fewer price cuts. And you can see the demand change really rapidly in this trend line. So you can see it in the blue line last September. It took a significant drop in mortgage rates to get that shift in market demand. We don't have that right now. Okay, that's all the data we have time for this week. I expect next week's report will show home sales ticking up again. Stay tuned to see if I get that prediction right.